Hi everyone, today we're going to talk about Shopify. Shopify's earning will take place on February 17th before the market opens. That is Wednesday. So a lot of people will be paying attention to start Shopify. Traders love Shopify because of its high volatility. Investors love Shopify because of its high growth potential. I have a decent sized position in Shopify, and today I want to share with you my analysis, both technical and fundamental, in the stock, so we can understand the stock price short term and long term. Over the last 2 years, Shopify has run up 700%. This year, 2021, I do think there's a lot more potential for Shopify to continue its run. So let's dive into the technical analysis and the fundamental analysis and see where the stock could end up by the end of the year. But first, if you are new to my channel, please consider subscribing. Please hit the like button to support the channel. I talk a lot about investing, about money management, and I do hope that you'll come back and see more future videos of my channel. Thank you very much. So this is a technical analysis, mostly to help traders to kind of gauge what to expect on Wednesday, February 17th, after the earning calls. The earning call is going to take place in the morning. So right when the market opens, we expect premium to deflate one way or another, especially if Shopify doesn't move significantly one way or another. So here's the daily chart of Shopify. You can see that it's been consolidating for a little while and then start breaking out lately with an all-time high of $1,499.75. So almost $1,500. If we also notice that it is currently trading above this white line here, which is 50-day simple moving average. Also well above this red line here, which is a 200 days simple moving average. So that's $1,000 for 200 SMA and $1,180 for 50 SMA, and Shopify trades well above that. There are a couple of gaps, the daily gaps that it didn't fill in the last week or so. So watch out for Shopify to retrace to fill these gaps. But there were also historical gaps that Shopify never filled. I have gap from the 800 to 700 that I still note here. So Shop has not come back down to fill those gaps. Let's take a look at the earning analysis here. Down here, the yellow line is actual and the green line is estimate. So if you note, Shopify has been beating Wall Street estimates from Q4 of 2019. So that's 1, 2, 3, 4 consecutive quarters of beating estimates. The stock does, interestingly, the first time it beat estimates, the stock gaps up and then moved down. The second time, which was Q1 2020, the stock didn't really do much at open, but then it moved up during the day with a significant beat down here. This one significant beat, but gaps up and tend to move down. This one also significant beat, didn't do really anything at open and then moved down. My general understanding of Shopify is that it tends to fill the gap at open, including the day of earning. If it does not fully fill the gap, it will attempt to fill the gap. So for traders, a gap play is a decent play, but at the same time, watch out for the actual fundamental because that could change the gap play significantly. Watch for inconsistency. So if there's an earning beat, but the stock gaps down, I would say that the gap play is really safe. If there's an earning miss and the stock gaps up, again, gap play, the stock to go down is also very high probability of success. For shareholders, the stock's been solid. I would not do anything before earning. I would not buy or sell based on any kind of expectation. If you have been holding shares, continue to hold shares because the stock has been doing really well for the last 2 years. One thing to note also for shareholders are, because the stock been running up so fast and Shopify does not have a huge amount of cash on hand, it might choose to raise capital in the next few days or weeks, which means that the stock could potentially go down at that point. And if you do want to add your position or start a position when the stock comes down, that will be a good opportunity to add. So let's take a look at the valuation here. Shopify is currently trading at 384 times forward PE and over 900 times trailing PE. Forward PE is more important because it does factor in future growth of the company, so I will only look at 384. Regardless, this is still a very rich number compared to a typical value type of investment. You're looking at between 20 to 40 forward PE, and Shopify is at 384. However, if you look at the actual growth year over year in terms of revenue, for the last 3 quarters, Shopify has been growing revenue at crazy amount of growth, as well as a reduction in operating expenses. Also significant reduction in operating expenses. So what you're looking at is a company with a great potential for growing the top line and great potential for growing the bottom line. It is not a slam dunk for a value investor, though. There's a lot of risk associated with this company. But if you look at the fundamental of this company, you'll understand why it is trading at such a high forward PE. It's interesting to note that ARK Invest has been buying Shopify even with the recent run up. The last time that ARK purchased Shopify was on February 11th. The stock was trading around $14.60 at the time. So even when the stock price was high, ARK Invest continued to buy the stock, which signifies high growth in this stock. As we know, ARK Invest exclusively invest in disruption technology and high growth company. So as of February 12th of 2021, ARK F, which is the fintech ETF of ARK Invest, owns about 3.21% of Shopify. ARK K, which is the innovation ETF of ARK Invest, owns about 2.5% of Shopify. And ARK W, which is the next generation internet ETF, owns about 3% of Shopify. So combined, they are over $500 million worth of investment that ARK made in Shopify, which is a huge number. Let's take a look at Shopify historical financial. I also want to shout out to Hypercharts. This is the company that has been helping me so much with my fundamental research in the various companies that I've been interested in. If you guys are interested, I'll put the link down below. They have a very nominal fee for an annual subscription, and you get a lot of different good information about virtually any public company out there. And they update it virtually as soon as the earning call is over. So really, really timely and quality information. So let's take a look at the revenue and operating income for Shopify. Shopify's revenue has been tracking upward as well as gross profit. However, the operating income has been not so great, has not been so great. It has been operating at a loss, except for the last 2 quarters, Q2 and Q3 of 2020. So let's scroll down here to net income. So the last 2 quarters, it had positive net income of 36 million and 191 million respectively. As far as margin, this is a very interesting chart. If you look at the light pink line here, the last 3 quarters has been shooting up. This is in line with both revenue and gross profit as well as income. The operating margin has also been increasing. So as I mentioned, this company has really good growing top line, right? The revenue, the blue bar right here, has been growing. At the same time, gross profit margin or gross margin and profit margin continue to increase. So you increase the top line, you also substantially grow your margin. That means that your net income gonna be hyperbolically up in the upward trajectory. If you look at the impressive growth curve in Shopify for the last 3 quarters, it has been going up pretty significantly in terms of revenue. At the same time, operating expense has been going down. This means that the net income obviously going to get much bigger, and it shows based on the net income chart that we saw earlier. As this continues to drop and growth either plateau or going up, we will continue to see net income to surpass in previous quarters, and that's where the source of growth for this company. So far, I've been very impressed with Shopify, and my position has been doing very well. As far as cash, the company only started building cash significantly in the last 2 quarters. So right now, as of the end of Q3 2020, it had over $3 billion in cash, compared to Tesla of 19 billion in cash and Apple of over 100 billion in cash. This is very minimal. At the same time, Shopify doesn't manufacture anything, doesn't produce any tangible products, so it doesn't need to have facilities or manufacturing plants that could be very costly in terms of CapEx. So the amount of cash is adequate and okay, but it's not impressive. I could see its balance sheet getting stronger with much better cash on hand. The market cap for Shopify has gone hyperbolically, literally from 40 billion at the end of 2019 to 120 billion by Q3 of 2020. And I expect this number to go up significantly by the end of 2020 after the earning calls announced. So Shop has been doing significantly well compared to its growth peers. Of course, I can only compare this with Tesla. This year alone, Shopify has returned over 300% as well. So keep that in mind as you hold the shares long terms. It's a very, very good company to hold on to. It is extremely volatile though. So this is it for this video. I hope you find it helpful. I personally will hold Shopify for the long haul. I plan to add to my position if there's a dip, and we'll see what the future will hold. But if you are traders, definitely check out the gap trade that I mentioned in my technical analysis. Hope to see you again in future video, and consider subscribing to my